Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, who is that over there? Oh, that's Mr. AJ Brown. Welcome everybody to the AJ Brown Show. Today is November 7th, 2025. AJ, I you having trouble seeing there? What's going on with the shades?
Well, today is supposed to be an employment report, but we got nothing because we're in a record government shutdown. This is how we're looking at the economy through 80s Run DMC glasses.
Oh, so you're seeing a little bit, but it's hazy, and you're getting some distractions. How
You-
where
that's exactly right. You got the analogy.
And so day
I can't see
38, I
anything.
believe day 38 of the government shutdown and no reports, which is going to start to affect the market. Flights getting canceled, like a significant number, starting to have an impact. SNAP benefits off the table for a couple of days now. Are we starting to now feel the pressure of the shutdown more so than ever?
Well, not only that, the Federal Reserve, if you remember last week in the comments, basically said, hey, with no data, what do you do when it's really foggy out and you're driving? You slow down with your decision making. So the Fed has signaled, and this week they even reiterated that. They said, with no data, we're probably going to take no action, which is actually, a lot of these tactics are being pointed at like pressure from one side of the political sphere, meaning, the SNAP benefits. Supposedly there is a slush fund, but, they're saying let's not tap into the slush fund. Let's create a little bit of pain. Same with, and it's all hearsay. I'm not picking sides here, but same with the FAA thing, creating some of this pressure. A lot of folks are saying it might, it's not necessary, but it's being done to pressure the other side, one side or the other, to come to the table and negotiate. But yet neither side wants to give on where they're standing. And now the Federal Reserve is adding into it saying, hey, you guys wanted rate drops, you guys wanted policy changes, but we're not going to do anything with no data from the government shutdown. And they reiterated it this week. So there's all this pressure from all these different sides, and yet you don't hear any sort of give happening. Maybe you hear some rumors that there's some behind the scenes talk, but out in the open, in the public eye, each side has got their heels in and they don't want to give.
Yeah, and they continue to try and vote to push the budget through, but the Democrats are pretty, set in continuing
How do
to
you
turn
get
it
your
down.
how do you get your health insurance? And if I'm being too personal, just tell me to shut up. Do you go through
Uh,
the marketplace?
I do not know. I
Okay.
have not trusted that for quite some time.
Oh, that's funny because my wife and I do, and we actually logged in. Now we have the Virginia marketplace, which Virginia is one of the states that created their own versus going with the federal run. But we logged in just to get an idea, and our insurance is going to go up um, close to 50%
I
every month.
I saw as high as 300% for some
Yeah, I
people that
think
were
I think
posting
for
videos.
I think for folks that are actually states that are part of the federal, and whatever it's called, the health insurance marketplace, I think, yeah, I think some of those are going up even more. I think some of the state ones that decided to create their own when they got the choice. I don't know if you remember back with the Affordable Care Act, states were given the opportunity to create their own marketplace or just adopt the federal one. I think states like Virginia are going to be able to buffer it a little bit, but man, our health insurance going up 50% is nothing to sneeze at.
Yeah, and not to mention the Trump tariffs are up in the Supreme Court as kind of being
Yeah,
debated whether he can actually do it or not. And so I don't know if there was a final decision,
not
uh
yet.
but the time lapse itself is kind of questioning whether he can do do all this. Let's go ahead and pull up the charts because
Yep.
I feel like although all this news was out there, it wasn't necessarily the driver for the sell off. I mean, when I looked at the week this week, the declines led by technology. But to me, I feel like on Tuesday or so, when Michael Berry, right, our the Big Short, basically the character who predicts the crash, came out and said, I'm shorting all these AI names, Nvidia, Palantir, and that really drove the market down. And then I think all these other things were like, oh shit,
Yeah, Goldman Sachs did the same thing. Goldman Sachs came out, and there was one other. I don't remember if it was Citigroup or which bank, but some of these big advisory groups like Goldman Sachs also said the bubble. But that's not new. For the last couple of months, they've been saying that there is a AI bubble. That even the guy from CNBC, the guy with the funny eye, Andrew Ross Sorkin, has been saying, it's not a matter of if there's going to be a bursting of the bubble, it's just by how much, right? But look at the VIX.
Yeah.
Oh, go ahead. I'm sorry.
Well, I was going to say the pullback was pretty significant, at least for this week or this month or the last 30 days. But when you look at the year, I know that you and I have always talked about we need a little bit of pullback. And so let's just pivot that to the VIX, because this is kind of the parallel gauge to, market coming down, VIX going up. But it looks like a healthy pop, not like one of these straight up and down over 2 or 3 days. Like it looks like there's money being put into this concept here.
Absolutely. And just so folks know, the good time to have put on the VIX hedging trade would have been either this last Friday, in the afternoon, or this past Monday, November 3rd. At this point, it's a little bit too late to put on the hedging trade, but don't worry. We're getting opportunities to put the VIX hedging trade on, every couple of weeks here. But yeah, our VIX hedging trade is coming very quickly to a point where we might wind up with a max profit again, like we did the last time. But yeah, the VIX is marching up, but not spiking up. So the anxiety is coming on a little bit more slowly than like an overnight. And that's because it doesn't seem to be caused by like one of these rogue tweets, right? If anything, it's just kind of the compounding of the uncertainty, maybe from the shutdown, maybe from AI being overbought, maybe from tariffs. And the question of whether tariffs stand or not, because now with the amount of money that's been collected from tariffs, having to come up with a refund. Did you listen to any of that back and forth between the attorneys and the Supreme Court justice? It was very interesting.
No, just the commentary from Trump saying, oh, well, we're going to have to pay back Europe. We're going to have to pay back Japan trillions of dollars.
Yeah, there was actually a question. One of the justices was like, now, if you do have to pay it back, how's that going to happen? And they were like, and one of the justices was like, it's going to be a cluster bomb, isn't it? It's going to be crazy trying to figure out how to pay it back, isn't it? And they're like, but yeah, the VIX is slowly going up. It's above its mean. It's not yet to the point where we call it founded fear. So it's just anxiety right now. But yeah, there is a mounting a bit of uncertainty. I just pulled up the S&P as well. Do you want to go through that?
Yeah, and I was just going to say on that VIX trade, I'm pretty sure on our last episode, your quote commentary was, yeah, I'm just going to wait for my signal before I get back into it, which is as simple as the blue arrow that you just saw on the screen. And so for the folks out there watching, that's one of AJ's free indicators there. And, you could see that was a wonderful setup. And so this indicator you'll also see on some of the other charts, but specifically for the VIX and for your premium selling strategies, like now this week was the week where you kind of wanted to be protected, right?
Yeah, well, a couple of things. So with the VIX going up, remember with our premium selling strategies, we're selling the options. We're not buying them. So that means when the options become overpriced, which is exactly what this VIX is basically measuring, right? When it starts to get above this threshold here and options are overpriced, being a seller means that you're on the side of that transaction. You're selling these expensive options. Your premium is going to be at a top. So we like that as premium sellers, but also with the extra kind of confusion in the market, it's good to be collared at this point. So putting your VIX on, I mean, putting your trades on, selling your premium, buying your protective option this week, it was a good week to do that. And if you do it early next week, that's even better. So I would say get those collars on there. And then, not only do you get the high premium when you place the collar on there, but now you can sleep easy at night because your position will self adjust.
And so when we look at the S&P, the pullback is significant. However, through the yearly gains, we're still looking pretty solid for 2025. And would you characterize this as healthy? Just something that you need to get the market a little bit more balanced.
Well, let's first go step back a little bit. So we identified a top reversal last week when we were here. We were like, is this top reversal actually, at that high close? We hadn't yet got it confirmed. It didn't confirm until Tuesday, right? Tuesday we got our end of day arrow that said, yeah, that October 28th close that was so high was the top. So, okay, great. Now we're starting to ask ourselves where the bottom is going to be. And this trend that we're in, it isn't yet mature, right? In fact, the one before that ended without it being mature, right? And when we say mature, what we're talking about is we need two tests of support and two tests of resistance for it to be considered mature, right? In order to draw a line of support, you need to have a start and a finish, two tests, right? And in order to draw a line of resistance, you need to have at least 2 points, a start and a finish. So until you have two tests of both, we don't call a trend mature. So this guy over here that we had identified when there was a trend change never got a chance to be mature before we got signaled for a new trend change. It would be interesting if we got yet another trend change, which could occur before this matures. Because if you start getting trend changes over and over again very quickly without each trend getting a chance to mature, that is the definition of a sideways choppy market. That is the definition of you need to be getting out of your directional trades and into premium trades. I had so many people all throughout the summer and fall say, oh, AJ, I'm not doing premium trades anymore because the market is so directional. It just makes sense. Well, I hope you've dusted off your premium strategies because it looks like we're in with the high VIX and with these sideways choppy markets. It looks like we're in some premium trading territory. Let me bring up for you while I'm doing that. I'm going to bring up my rainbow graph here. Okay, so when we got our new trend, our first move starting on October 10 and just ending on October 28th was what we call an ideal uptrend move, right? See how it went into that green zone SIP?
Very much
Now,
so in the green zone.
very much well, that's considered an ideal uptrend move. Now, an ideal uptrend move when you have a little bit of a pullback, and we call that range contraction, would be into this purple or magenta zone, right? And as of yesterday's close, that's where we were ending up. However, as of today, and of course today's not over, anything can happen. We can see the bulls come back this afternoon and bring us back into the magenta zone. But as of right now, this pullback is bringing us into this red zone. So I want everybody to write down $6,680. I'm rounding my threshold down. If we wind up getting a close below $6,680, that reinforces the sideways choppy theory versus the uptrending theory. So getting into this red zone means that our market is changing its personality from being an ideal uptrend to now being more of sideways chop. And again, that means that a lot of your directional trades, if you're in bull directional trades, are under pressure, right? You might want to be thinking about trailing stops or even just closing them out at profit targets and thinking about sideways choppy strategies. We're talking my premium selling strategies. We're talking about vertical spreads. We're talking about iron condors or condors in general, double butterflies, all those great option strategies that profit on sideways chop. Now, can I go on with some other thresholds? Do we have a minute?
We certainly do.
Okay, I'm watching very carefully this 6,550 level. So that would be a full retracement. That would mean getting below this previous move. That would be that scenario that I talked about, which is a trend change before the previous trend got a chance to mature. That means we would have had two trend changes without any of them ever maturing. Again, sideways chop. All arrows seem to be pointing at sideways chop. So I'm watching that 6,550 level, and the how we've declined in just the last week and a half. 6,550 is not actually that far away. It's 90 points away from where we currently are. And then the last zone I have for you, Sip, is down here at 6,470. If we start to trade down before we find a bottom reversal below 6,470, this is my stretch target. If we get below 6,470, it means that that's an ideal downtrending move. And we actually need to start looking at the fact that maybe that bubble is starting to let out steam. Maybe we're thinking about some bust. We're talking about trend reversals. So that's pretty far away from where we are right now, but it isn't off the table. So I want people to pay attention to those three levels: 6,680, 6,550, 6,470.
And when you're breaking this down, my thought is, could this be led by the Magnificent Seven or a few names more so than like the overall market, because of the run up throughout the year being led by a handful of these names now? And so could, in theory, the pullback to the green area be kind of holistically good because the market's kind of not being like, these Magnificent Seven are not such a so far away from the overall market? Because I do still feel, and I don't know if you agree, that these big names are still driving a lot of the day-to-day movement. I mean, even just in this pullback, I don't know what percentage, but Nvidia has a lot to do with it, being a name that's been to the upside as well.
Yeah, and we have seen periods where the Magnificent Seven was the majority, and it still is, right? But I think in the last month, we've seen a lot of cash flow going into other names. A lot of financials have been getting some money. Um, so I think it might be a little bit less. I think people have started to read the tea leaves and have been diversifying. But you're right. Still, the Magnificent Seven, if there's a sell-off in those, it could be somewhat catastrophic.
All right. Is there anything else that you think we should cover? Gold, Bitcoin, bonds, anything else sticking out for you before we continue,
You
on the
know,
show?
like we said about the employment numbers, A whole bunch of different groups are doing their best to fill in the gaps. Now, of course, the gold standard will be if the government reopens and the statisticians that are just paid to be statisticians are allowed to do their job, collect the data, start reporting the data. But we did get a couple of reports this week, and they do not point to a very rosy employment situation. So ADP came out with their numbers. Challenger job cut report shows that there's going to be a lot of job cuts across the board, but especially in those tech plays. And so with a lot of those, attempts at employment numbers coming out, well, um, it doesn't seem that rosy. And so when you take a look at what investors think the Fed is going to do in December, compared to what we saw last week, it's ticked up a little bit. Last week, the number was around 63%. Now it's up at 70%. This is for the potential for a quarter point rate drop. So it's ticking up a little bit, meaning that the Fed has been telling us we're flying blind. And so our knee jerk reaction possibly is to not do anything. But all these other reports are hinting at a weakening employment. And so what that tells us is that maybe the Fed will go ahead and take action anyway. The other thing I wanted to point out is, the Fed has been saying that they're going to take a break from quantitative tightening, which quantitative tightening is a way quantitative tightening would in fact reduce inflation, but may actually accelerate an employment fallout. And so they said in December that they're definitely taking the month off from quantitative tightening. But man, leading into it, look at what happened last week. They did a huge amount of selling of their bond holding. They dropped their holding from 6.5, roughly 6.59 trillion down to 6.57 trillion. So almost 20 billion sold off in bonds by the Federal Reserve. So, one thing that I have been paying attention to, in the first Trump administration, he paid a lot of attention to the equities market, the stock market. Where's the Dow? Where's the S&P? Where's the NASDAQ? I've noticed that what he's really paying attention to in his second term is the bond market. Where's the 10-year Treasury bond? Where's the 3-month Treasury bond? So it's interesting. It's almost like, this behind the scenes Fed and the Federal Reserve and then the US government, they're kind of subtly volleying between each other without making it as public as it has, although every once in a while Trump tells us how much he hates the Fed. But that's really interesting to me.
Well, let's see. And then you pull up gold. Gold is kind of sitting there at that 4,000, which is probably makes a lot of sense.
It's not up. It's still at highs. I mean, when a year ago when I bought my gold bars at Costco, we paid 3,200. So, 4,000 is still pretty high, but it's not up at 4,250 where it spiked, in the middle of October. And then oil is down. There's not going to be any drilling anytime soon with the price of oil around $60 a barrel. And Bitcoin, interestingly enough, is really, Bitcoin, I think at this point, it's still not considered a reserve like you would say gold. So Bitcoin, I think, is more of, when folks feel like risk should be on. And actually, Bitcoin has sold off 20% since its early October highs. 20% is a lot. So it's down at about $100,000, $100,000 per Bitcoin. So that tells you that I think folks are hedging on their risk. I don't see them going all into gold again like they did a month ago, but they are investing in options to protect themselves. So I think having our blinders on and not knowing really what comes next, I think that what that's doing is it's giving people a little bit of anxiety. And instead of going all in to sell off, I think people are instead hedging and kind of sitting on their hands, at least for this week. But man, what's happening with the snap, what's happening with the airlines, what's happening with all of this uncertainty. I wonder how much people are going to sit on their hands in the upcoming weeks versus just decide to take risk off the table.
Yeah, and for the record, the Michael Burry did use options as his position to kind of get ahead of and profit from this overbought market. So not only, if you're not using options in your day-to-day investment portfolio, this week is a great week, in learning and checking your portfolios and saying, that kind of hurts. But had you had some of those option trades on, that's where that protection and, extra income, if you set it up correctly.
I'm telling you guys, and I just got to add to that. I eat and breathe these option things. In the late 90s, almost 30 years ago, I decided options was the smart thing to understand because there is so much flexibility. But with that flexibility comes an additional amount of complexity. Now, in my mind, I've been talking this stuff for 30 years. And so the complexity, it's just every day for me. But I understand because when I talk to folks, I sometimes see them glass over when I start talking about other ways to use options besides just leveraging stock moves, right? People are like, "Oh my gosh, you're talking about all these other things." But I'm telling you, if you just take a little bit of understanding and understand how the options market work and how these options can be used differently by, selecting different expiration dates, selecting different strike prices, or combining these options together into multi-leg strategies, you really will have a leg up on the market. And so I can't emphasize, especially when the market's doing what it's doing right now, it's the option traders that are going to, walk out. And I'm not talking about, again, option traders that are simply leveraging stock moves. It's when the stock moves become unpredictable that you can use options in other ways to really profit. I can't emphasize enough how much you guys really need to just sit down and feel comfortable with how to use options in different ways.
And that's why we've created this quick links page where the viewers can learn some of these basic concepts in this free workshop. As we mentioned at the beginning of the show, that indicator suite, you'll see that later on as AJ gives us his pick of the week in our speed round. And then, more about Trading Trainer as a program, custom coaching, and all the social links. So we just threw that into the chat. So if you haven't gone in there and signed up yet, there it is. Head on over there. All right, AJ. Man, there's a lot to cover this week, even though we have no data, basically. And so for my morning sip, today's morning sip, I feel like outside of the shutdown news, some of this tech news, the big storyline this week, and I'm curious of what your take on this is, the new mayor of New York, right? Zoran Mandami has been taking up my social feed, right? Even in my own personal network, I was so surprised at how many people were supporting a quote unquote socialist, right? Not necessarily understanding what socialism is. And from the election, obviously he won. I did come across another tweet that I thought was very interesting, was who was supporting this individual in New York, and predominantly led by women ages 18 to 24, with almost 84% of that demographic supporting Mandami. And so AJ, did you follow along with this? Do you have a take? What are your thoughts on because in a way this has spurred the Democratic Party, which is probably why they're continuing to fight the non-funding scenario. So what is your takeaway from what's transpired this week?
there was one other statistic I don't know if you picked up on, but his canvassers, I mean, it was off the charts. 1 in 10 of his voters were also volunteers in his campaign. 1 in 10. That means like everybody and their brother in New York was out there working on, getting his message out. That's incredible to have that much grassroots support, not just having, 1 in 10 of his voters were actually volunteers for his campaign. So yeah, and that's really the whole definition of being, the, the whole social movement. And if you think about it, if you look carefully at his messages were the same messages that Donald used to run in 2026. It's just that he's saying I'm going to deliver on them differently, but it was like, hey, I'm going to support you in healthcare. I'm going to give you free, if you're a New Yorker, you're going to get free public transportation. All the stuff that he's like, this is how government is supposed to help its people. And so we'll see. I think where people are a little bit disappointed is they're not, they don't feel like they got the results for voting for Donald that they expected through all of his rhetoric. So we'll see if the opposite side, who has different ways of hopefully, delivering it. I wish him the best. I saw the concession speech by Cuomo, and I was very uplifted by, people were like, he said, listen, we didn't win. And then there was a whole bunch of boos. And he's like, no, 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 this is Andrew Cuomo. He's like, no, 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 we don't do that here. We are, all New Yorkers, and this guy won, and we're all going to make sure that he's successful. So, I wish him the best. He's got a whole different mentality on how he's going to help the people, and so I wish him success, because so far, all these tactics, I mean, everybody kind of bought into this new idea behind tariffs, and it doesn't seem like that people feel, it's really what people feel. It's kind of like the stock market. It has nothing to do with what a company's actually doing, and how they're actually producing their widgets or whatever they produce. It's how investors feel about the company, right? So it's however the people feel things are going is really and people really want instant gratification, right? And so if tariffs, we still don't know if tariffs are going to work or not. They haven't been in place long enough, and they really haven't been stable long enough. They've been moving all around, which is what they're talking about at the Supreme Court right now. But I wish the guy the best. I mean, that combined with all the other things that happened on Tuesday for the Democratic Party, here in Virginia, right outside of Washington, D.C., where I live, the Democrat won. Do you follow that? What is it? Kalshi.com, the betting site?
I mean, I know what you're talking about. Yeah, Robinhood has a version too. I don't know if you knew that, but
I didn't know that, but
and you
I
see all the
did.
bets like of the mayors and the governors and sports.
Yeah,
Yeah, it's legit.
it wasn't, and it's very predictive.
Oh yeah, it's almost like a chart. We should review it on one of the episodes
I
because
think I just
I've been
started
sports
looking at
betting
it.
that way, AJ. I've been sports betting on Robinhood.
That's cool. Yeah, I just for this election started to, somebody introduced Kalshi to me. One of the actually, you know how you've set me up on TikTok. It was one of these other TikTok folks that we've started following each other who sent me a direct message and said you should be looking at Kalshi. So I have been, and it was more of a question, not whether the Democrats would win across the board, but by how much. And I think that's what they're kind of celebrating, isn't it? Because they won by big margins, not just by little margins. So, and then, yeah, the extreme, supposedly the extreme guy in New York. Well, again, I wish him the best of luck. I think it's like everybody's disappointed with what has been the same way for the last 40, 50 years. They want something new. And so they're kind of going extremes each election, saying, okay, let's try this. This is something brand new. And then if it doesn't work in the first year, they're like, okay, let's try this other thing. This is brand new. So, let's see.
Yeah, some other interesting facts. First Muslim mayor, which I know has a lot of people debating that, and then fairly young, 34 years old,
He's a
with
young dude.
not much, actual like work experience.
Experience. Right. Right.
So
And he's got a kind of his I think he's been keeping her quiet, but I was reading about his wife, and she's kind of got some extreme or has been having some extreme ideas like on Israel and things. But that's New York was like not happy with what was coming down from the federal government, and it's basically a referendum, I guess. But it hasn't sped up this shutdown, has it? I don't see that these people here, not far from where I am podcasting this show today, they just don't seem to want to compromise.
yeah, well, you and I really have little say on any of these matters, and are rather just trying to react and make some money off of what's potentially setting up for us. So
Yeah.
with that, let's go ahead and take a break. Once again, all you lovely folks, head on over to the Quick Links page and get access to all of our goodies. We're going to go through one of AJ's picks of the week. We'll go
Yeah.
through our speed round. And then, as always, if you guys have any questions in the meantime, feel free to throw it in the chat. And feel free to throw in some commentary on what you think about maybe the mayoral election or the government shutdown, or
Would love to hear.
employment news, your perspective. So, let's get a discussion going. Otherwise, sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. So I know last week I forgot to play your AI pick of the week intro. Should we give it a try?
Yeah, show the folks the new this is fun.
Now folks, we're still tweaking this, right? Like, maybe in a few weeks, as AI progresses, our production skills will as well. But here we go, folks. AJ's pick of the week.
And now it's time for your pick of the week.
All right, AJ's pick of the week. He's knocking him. He's knocking out.
I'm knocking him out.
All
yeah,
right.
that's good. I'm a MMA star there.
Well, that was off of Trump's Asia trip. I was feeling very martial artsy when we came up with that one. All right, AJ's pick of the week this week. What you're liking, what you're looking at. This is Citigroup, ticker symbol C, a popular name on the show. I know you had some good commentary on financials. What do we got setting up here?
Well, so Citigroup, a lot of the financials are great premium selling trades right now. That's because they've been nice and stable and sideways, choppy. I am getting, let me switch over here. I'm going to switch over my indicators from the moving average crossing, which I use to analyze the broad market. I'm going to use the fast MACD. In fact, I'm going to tweak it a little bit. When I'm looking at the VIX, I like to use the fast MACD on close. But when I'm looking at stocks that have a recorded volume, I like to use volume weighted average price. So that's one of the benefits of our indicator to download, is that you can change what the various indicators are calculated, what the seed value is. So I like to play around with that. So you can see here, yesterday we got an end of day signal for a top signal on Citigroup, and today we're actually getting the follow through. So today would be the day to think about either paper trading or real money trading. And remember, if you have any questions about the strategy, you don't understand it, one of the best ways to do it is paper trade it and learn as you're doing it without actually risking anything. So we're looking at a top entry. So a top entry, I'd either want to short the stock or I'd want to buy a substitute put option. And I'd want to go pretty deep in the money as well as farther out in time. And so the put option I picked out that I would substitute this out would probably be the July 2026 option, and it would be the 120 put. So either shorting the stock or buying that 120 put. Now, this is a higher price stock. So another kind of corollary suggestion would be placing a bear vertical spread. It could be a bear put vertical debit spread or a bear call vertical credit spread if you have a margin account. But remember, don't size that particular position. Don't size a vertical spread any more than what you're willing to lose, because vertical spreads are known from going to cash flowing positive to a complete loss overnight. So you only want to put maybe somewhere between 2 to 4% of your portfolio maximum into a vertical spread. Either way, that's kind of the strategy. And then if you get to a bottom, you could put the other side of the condor on that if you're using the vertical spread, or you could put your put, sold put premium, bought protective call. That would be a collar that we would do with our other strategy. Any of those are possible, but Citigroup is poised really nicely for our premium trades. And right now you want to be doing a short trade on Citigroup, whether that be shorting the stock or using a substitute put option.
All right, Citigroup looking like a nice little setup there. So add that to your watch list, folks. All right, we got a couple other interesting names in the from our speed round. But before we dig into that, AJ, did you see any of the Tesla stuff that was released yesterday?
Yeah, well, yes, and I saw that they went ahead and blessed Elon getting his what is it, $1 trillion valuation on his payoff package. But yeah, he's going robots. He's going all in on robots to kind of justify the overpriced valuation for Tesla if it was just a car company.
And the reason I bring that up is because the first name in our speed round, Frank out of Tacoma, Washington, wants to know what your thoughts are on Uber, which is kind of one of those parallel players that Tesla with the robotaxi is. I'm seeing them bite into this business, but Uber at the same time is trying to do some self-driving automation as well. But from a trading investing perspective, what do you see set up here for Uber?
All right, Frank. So I'm waiting to see if Uber is going to bottom out, and I'd like to see it bottom out maybe above this $90, because I want to stick with this level of support here. So I want to see it bottom out no lower than, actually, I'd let it go down as low as 88, but $90 is pretty much where I'd like to see this thing bottom out. And then I would want to either go long Uber, or let's use our options lookup tool. Our options lookup tool, by the way, is available to anybody who downloads our indicators, at least in its current beta form. And so what's really nice is we've got so much options data in our database that you can go back and compare. You can go all the way back. We even have more than what's on this pull down menu. So, if you want to start looking at what happens with, implied volatilities over time and really understand your options, there's no other place I found where you can get this information for free. You either have to sign up for a brokerage account or you have to pay a fee to some of these other companies. You can get it for free from us. We just happen to have all that data. So pulling up Uber. I would go, if I was going to find a substitute option, I would probably go out at least to June of next year. I could also go out to September, but maybe June of next year. And we want to go deep enough in the money. And we also, yeah, I like this Uber. Actually, let me look at the chart one more time. I'm looking for actually a call option. So I'm going on the wrong side here. Let's come up here. Yeah. I would probably be interested in, gosh, I really like this $50 call. This is the Uber June of next year $50 call. It looks like it would be a good substitute for buying the stock. It's going for about $44. It's a little bit overbought, but not too bad. It's less than half the price of the stock. And so if you wanted to include a little bit of leverage, you could buy some of that Uber. But I don't want to do it until I see a bottom signal. So let's let that bottom signal form. Let's hope that it's above about 89 bucks. And then let's go long Uber or go long with that substitute call option and take it from there. And if that's too rich for your blood, we could do a bull call vertical debit spread. We could do a bull put vertical credit spread if you have a margin account, maybe using the 90, 89 or 89, 88 strike prices, and probably going near term. So looking at the November or December expiration dates, or unless you want to go weekly. So there's a lot of options here, but I see the sideways chop that you're looking at. All we have to do is wait for that bottom signal.
And your lovely indicator will help us with that. So,
Absolutely.
Frank, hopefully that was helpful. Moving on to our second name, a little bit more market agnostic, I believe. Kelly out of Lincoln, Nebraska, wants to know, are people shopping less? Walmart, ticker symbol WMT. How's the consumer, the biggest, retailer in the world? Do we have an opportunity here?
What's interesting is, a lot of people have been saying that the holiday spending is going to be much less. What I read in a report just 2 days ago was that, yes, there's going to be less spending, but what people are going to do is they're going to look at other discretionary purchases that they would make for themselves and kind of scale back on that, but they're not going to be scaling back on gift giving this year. So that was an interesting poll. We'll see if that plays out, but it looks like, the holiday season is still going to be a strong one. Okay. It looks like Walmart has tested, they've turned my level of resistance, which was around $100, $101, and turned it into a level of tested support. Because look, today I'm already developing a bottom signal from where I used to look at this. So here's what I'm going to do. I'm going to take my drawing tools and I'm going to start from a clean slate here. I'm going to get rid of all of this so that I'm not, and I'm going to redraw my level of support and resistance based on this new level of support. Roughly, I'm going to bring us down to about $101.25. And then I don't have a clear level of resistance. So I'm wondering if I'm testing here. But here's the beauty of our premium selling strategies, especially if you leg into it the way that we do, is that the first leg is actually a directional trade. So if the second leg, which is triggered up at a level of resistance, doesn't actually materialize, that's fine, because you're in a directional trade, right? And so, yeah, I could see if I get follow through. Now, what do we got here? We have a earnings coming up on November 20th. And let's see, previous earnings, this was on August 20th, did give us a little bit of movement. Let's look over here. It looks like Walmart investors do move the stock a little bit due to earnings, but it doesn't look like, and I want to see about a year ago. So let me pull up a whole year. I mean, earnings season for Walmart does sometimes, and especially around the holidays. I'm looking at the one last year that came in at this was on November 19th of last year. It was a little bit moving. And then, this for retail companies, you always have your holiday one, but even more importantly, you have the one after the holidays where people come back and do the refunds. And so you usually see a kickback when things get brought back. So let's be careful around earnings. I don't know if you want to wait all the way to November 20th, but here's what you might consider doing. You might consider, especially if you get follow through on Monday, I wouldn't trade today. I would wait until Monday, and I would either buy the stock or buy a substitute option, follow the same equation, use my options lookup tool, go out to June or July, August, September of next year, go deep enough in the money that the extrinsic value is very small, and find a good call option substitute. And then before earnings, let's make sure we have our collar in place. That means you're going to sell near-term call premium, buy a protective put. When that collar is in place, you've locked in your gains, right? And this position will now self-adjust no matter what happens to the stock price. You can sleep easy. You don't have to worry about any sort of, unexpected risks. Everything is defined, and the trade becomes hands off, and you just let time and the signals tell you when to roll out into the next adjustment trade. So that's pretty much what I would do with Walmart. Again, you can use those vertical spreads as well if you're looking for a budget. But again, with earnings, I might stay away from the vertical spread and instead go for the legged in premium selling position that I'm so known for.
Yeah, I imagine a lot of people listen in to the insights that Walmart's giving, seeing as they have so many consumers in so many different demographics. So it will be interesting to see what comes out of those earnings numbers and data. Third and final name in our speed round out there in New York. David in Queens, New York wants to know, is there a play in the company named Block, ticker symbol XYZ? I believe this is one of Jack Dorsey's companies.
This is Square. This is the new company's the new name for Square. The
processing. Yeah,
processing. Okay, so investors weren't so happy with the earnings after hours. I think, was this after market close? Yes, it was. So yesterday they weren't so excited about it, but look, they're already buying back. So I guess your question is number one, is this a buy? I would say let's let the new pattern materialize. If we wind up moving back up into this channel that we were, it was just an initial knee-jerk reaction, great, right? If we wind up defining new support and resistance, great. We'll trade off of those numbers, but let's not just trade off of this reaction right now. I'm not a betting man when it comes to the markets. I'd rather use my option strategies for the sure thing. So right now, if I was to be opening a trade, I would say hold your horses, let a pattern materialize, and let's see what we can do there. Unless you have some insider information on Block, and that would tell you that this was an overreaction and that it's coming back up. But I don't have that information. Now, if you were in this trade as a premium selling trade and it corrected like this, the first question is do you have your collar in place? Because if you have your collar in place, it doesn't matter. Basically, in this case, if your collar is in place, one of two things is going to happen. Either you've got a protective put in place, which just skyrocketed in value, offset any losses of your initial position, plus your premium trade went to zero. That means you get to keep all the money you collected in the premium. And so you're just going to play off of the bottom reversal here if it's a protective put. If on the other side, you wound up selling the put and having a protective call, well, you're going to get exercised out of your main position, which is great. You're going to get exercised at its max value. And now you're going to let it go up as high as it can before you liquidate your protective call again. And you've got 3 to 6 months to do that. So take your time and get out of you don't need to get out of the call today. Get out of the call when you get a top signal. That's how our trade plan works. If you were shorted the stock or in a back month put option, looking for the opportunity to collar it, and this happened, you're in Fat City right now. Your shorted position or your substitute put option just increased in value by $10, right? And I'm sure that that's more like doubling, if not tripling its value. So celebrate. The only thing that would have been a bad situation, which I can't imagine you're in, but if you had gone long this stock or gone long a call option and don't have your collar in place, that's where you don't want to, if you wake up and this happened to you, just like for any directional position, now is not the time to liquidate it at a loss. Let it creep back up and give you a top signal before you liquidate that. So there's so many scenarios. I don't know, where you are in your trade, but all but one of them are extremely positive. And that one that seems like it would be a negative, actually, you just wait a little bit and it probably won't be as bad as you think it is.
Block, ticker symbol XYZ. I just looked them up and I was surprised to see they have 12,000 employees. I feel like that's pretty large workforce for the company. So thank you for that, David. All right, moving into the end of the show here. I did stumble across a video here. I'm gonna go ahead and play it before we close out. This is the test. So yesterday, Tesla released this video of basically the robo-taxis and the Optimus Prime, and it's pretty slick. So let's go ahead and play it here for a moment about how they essentially looks like the same battery technology, AI chips kind of being enforced in the cars and then into the Optimus Primes. And so, AJ, my question to you as we close the show out, would you ever have one of these at your house, doing your laundry, doing the dishes, doing some yard work? Would you ever see that happening in the future for you?
Yeah, absolutely. I mean, I don't know. I'm very much, I've been going over since we got this big piece of property that we're living on now. I've been visiting and just they hate me there because I don't buy anything. I just walk around. But I've been going to the John Deere. And do you know John Deere has been putting a lot of AI into their tractors and into their bulldozers, right? Farmers are letting these things plow their fields without any drivers. It's quite awesome. And I could see myself owning, a tractor that would do my lawn and would even do things like dig trenches. I'm pulling out my engineering degree and I want to put a rainwater collection system into the ground and then use that to fill the pool and all that good stuff. Filtration and all that. I could see, a robot like that going and testing my filters and making sure everything's nice and clean. So yeah, I'm all for automation, especially if it means that we can, it's the definition of efficiency. If I can, live in a place and not have to have, myself, age prematurely because I'm trying to maintain this place, but instead take advantage of all the benefits without having to do all the extra work, I'm all for it, man.
It's the evolution of man. Horses to cars to mail to the telephone to the internet to the cell phone to the iPhone, now to Optimus Prime to robots. And so we're just gonna have to adapt.
Do you remember the Kubrick movie called 2001: A Space Odyssey?
Yeah, with Tom Cruise, I think, right? No?
No,
Oh
no,
no,
it
that's a
was
different one.
before.
Yeah,
Yeah,
yeah.
no, that was before Tom Cruise. But the interesting thing about that was how with AI and in that movie the AI was Hal, right? And Hal and the human started to get into an argument, and Hal like locked the human out in space when he was doing a spacewalk. It's like, sorry, I can't let you back into the space station. But it was interesting because they were talking about how the humans with the AI, they were showing how the human was like eating like this mush that was basically a smoothie, right? And they were kind of like, even though overall we're evolving, humans as individuals are sort of going back in time. Like now they're eating primordial ooze instead of just eating like meat or something. So it is interesting. Like, will AI and having them do all the stuff that we would challenge our brains, are we going to start being like a dystopian environment? Like, what idiocracy, we're going to be dumb now because the robots are doing everything that we needed to know how to do in the past. So now we're just going to get dumber and dumber. I don't know.
I saw a tweet this morning that someone was like, "Yeah, if you walk into Harvard's library, everybody has Chat GPT up now." So it's like, all right, well, we'll keep an eye on it.
I mean,
AI
we're making funky transitions for our show out of AI. So, I don't even have to go into the boxing ring to look like I had a good bout, right?
yeah, there's so many tools and opportunities, and ways to utilize it to make our lives a little bit easier. But I think you have some valid points. All right, last minute, heading into the weekend, heading into the first full week of November.
Yeah.
What are your thoughts? What is your advice? What do you want to keep an eye on?
I'm keeping an eye on the VIX, right? I see that somebody asked, where is that founded, unfounded fear threshold? It's at $26, right? You can qualitatively know where it is because, things are out there that make sense that it would be fear. But from a quantitative, we watch the VIX, and I'm watching it today, right now. It started out this morning at $19.50. For the VIX to go up $3 in a single day, that's a lot. And so I'm watching it. It's at $22.50 right now. And I'm watching that level at $26. Why are investors starting to have so much anxiety? And will it materialize? A lot of times when we get the VIX above 26, something clear becomes apparent, that the fear is not just unfounded. There's something out there. So I'm paying attention to the VIX getting up close to 26, and then paying attention out there in, whether it be the blogosphere or whether it be socials, to understand why people are getting afraid, and making sure I'm ready to start selling this premium to people because I want to make top dollar on it. So that's kind of the thought process there.
That's right. And if you guys want to get in on some of that action, head on over to the quick links page. We've got all the goodies there. Once again, the link to this is in the chat. AJ, thank you once again for your lovely insight this morning, afternoon. Thank you to all the lovely folks out there. Feel free to show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions, feel free to hit us in the DM. Head on over to tradingtrainer.com. And hopefully we'll start to get some more clarity through the rest of the week. Otherwise, that's all I got for you folks. AJ?
Take care, everybody.
All right, folks. We'll see you next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.